Traders, Anthony here. I'm looking at gold daily time frame. Interesting chart. Bearish, big time, but there's a few things that we need to look at. Under here, we've moved into a pretty significant range here. This is traded into big liquidity. Okay, we've got sell stops that are sitting under here, under these candles here that have been hit with a vengeance, big time. Right, so it's tapped into that, taken out these stops, and you know, you want to think of it or look at the chart from a big money perspective. They sell, right? This is big money we're talking. So they sell. They work their orders in here again, and distribution level, right? And we get this move here. This is huge. So if they're selling here, what do you think they're going to be doing down in here? Unloading their quota, right? And they have the liquidity in here to be able to do that, to be able to pair their orders with these sell stops. So I'm expecting from here, I'm expecting a decent retrace, a move off this low. And it kind of makes sense, like if you're a Fibonacci retracement trader, well, we'll go down to the 4-hour time frame and we'll have a look at it. Let me just mark up a couple of key levels. We've got the low here. That's a point of interest. You know, actually we could pull it through these candle bodies. That makes more sense. That will do. We'll do that. All right, so level of interest here at the base of this distribution range, right? We've hit this liquidity under here, and if we go, and actually, like if this is going to be short, you know, we get a retrace and then we go short again. Well, you've got then, you know, these levels under here as a potential target as well. All right, so we'll go down to the 4-hour time frame. Have a look at it from this perspective. Yeah, I really like what I'm seeing on the chart at the moment. And what makes a lot of sense to me is if we pick up a Fibonacci, right, everywhere we look, I'm looking for a Fibonacci retrace. I mean, you name it, you know, wherever you want to go. The pullback into, look at this price swing, every price swing, high, low, and then the pullback into, this is my threshold here. It's got to move into, or it's got to move beyond this 50 for me to get interested, right? I mean, look, if it rolls over here and travels south, I'd let it go. But I'm interested in a sell if we move back up into these levels here. So let's just have a look at a couple of things that we've got on the chart that are of interest. We've got this green candle here, or this value area, I should say, this whole range in here, a distribution range on the 4-hour time frame. So that's where big money distributed through here. Okay, big resistance level. And if we look at the Fibonacci, it coincides with, let me just pick that up, coincides with this 61.8, right, beautifully. But the thing that we've got with this is this thin candle, this red bearish candle here through here, right? Bearish, it's one-sided trading. So we've got this imbalance. The market is going to look for two things, right? It's going to look for liquidity, for one thing. So you want to consider that it will look to hit the sell stops that are resting all through here, above this range, all through here. We've got, sorry, buy stops, I should say. People are selling, so they're placing buy stops all through here. So in terms of liquidity, that's a target now, given that they've already hit these lows. So we see it push back up in here to take out liquidity that's up in here. And price rebalances. So, you know, there's two things that I'm expecting to occur here. that are, giving me reason to look for a buy back up into these levels, and then a sell from up in here down. Right, so that's how I'm looking at this chart at the moment. We could go to, let me just mark that up as a 4H. So if that's 4-hour distribution, and then we go down to a 1H. Oh, that didn't name. Hang on, guys. I'll just label that. Oh, it didn't. What's going on here? Rectangle. Text. All right, bear with me. I'll just do this. That should do it. Yeah, okay, 4-hour. We'll go down to a 1H and show you how I'm looking to get involved with this. There's a couple of ways you can trade this. You're looking for a buy down in here, right? But jumping in here right now, mid through the Asian session, just buying at this level, yeah, I mean, that could work for you, but it's a bit hit and miss. There's risk involved with that. Well, there's more risk involved with that. Now, what I really want to see here is you want to consider the Asian session. There's two things that can happen in the Asian session. One, it can either range, or two, it can trend. All right, there's a couple of concepts I'm going to cover with this. Let's just go down to a 15-minute time frame. We've got our chart mapped out, marked up, in terms of our points of interest. Oh, where are they? Okay, see, up in here. So we want the pullback. We want to move back up into here, and we want to buy. So let's just grab that. All right, so there's the target area. There's 50 to the 61.8 in through here. And you want to look at the 4-hour. We've got the 4-hour imbalance. That's a target, right? This is also giving us this 1-hour, this thin candle on the 1H imbalance, right? So there's a nested imbalance, 4H and 1H through here. That's fairly significant. So I'm expecting a pullback up into here. Now, here's the thing. One is you can just jump in here long and hope for the best. Or two, you can get specific about how you get involved with it. Two things can happen, as I mentioned earlier, in through the Asian session. The first thing you want to do is you want to mark up on your chart. Well, midnight New York is probably the first thing I would mark up, right? So there's midnight. Let's just do that. And the opportunity for me is going to show its hand into the London Open. Where are we? New York midnight. I'm more interested. I don't really want to trade this now through the Asian session. I want to trade this mainly into the London Open. So we mark up midnight, and then I want to have a look at probably a 5-minute chart, but let's just go to a 3 a.m. New York time is the London Open. So you get London. All right, so look for the opportunity as it trades. Okay, mark up your chart, and we want to see what happens as it approaches this blue line. After that, you're going to have the Asia close, the Asian session close at 5, right? This is really simple stuff, guys. It's just we're looking for an opportunity into two times: the the London Open and the New York Open. Okay, Asia close is important because you want to watch how this trades as we approach the London Open in through to the Asia close. So it's going to be this time zone through here from about 2 a.m. in through to 5 a.m. New York. Right now, this is an ICT concept, not my idea. Right, this is the London kill zone. Right, so this is where I want to look for the opportunity. The next opportunity, well, we'll just call it the New York Open, just to keep things simple. I don't want to drag this video out. Okay, so 8 a.m. New York is the New York Open. All right, hang on, guys. Just do that. New York session open, right? Okay, so look for the opportunity into this blue line and into this white line here. That's what I'm saying. Now, I did mention earlier there's two things that can happen in the Asian session. The Asian session can either trend or it can range. If it trends, let me just grab my pencil. I would expect it to potentially trend up. If it's trending, I'm going to ignore the blue line, the London Open, and I'm going to be looking mainly for a short, potentially, okay, around the New York. Something like that. That would work for me, right? If it's trending through the Asian session, that's what I'm going to be looking for, something like that. So I'll ignore London and then I'll look to sell into New York. Now, let's just assume that this ranges into the London Open. We'll go down to a 5-minute time frame. If it ranges into the London Open, there's really what I want to see here, because I want to go long, right? I want to buy. So what I'm going to be looking for is specifically this. Okay, it does what it wiggles around, or however it kind of works, right? But I want to see it do this around the London Open. All right, that's the kind of movement that I'm interested in. Watch it into the New York. That's the start of our trading day. And I'd like to see some kind of, like, we get the range. I want to see some kind of move here to entice buyers in so that they set up liquidity under it. It's just the volatility after the range. It's going to be something that you see everywhere. Then, you want to see them hit those stops. And when this starts to trend up, we have an opportunity to get involved, right? Long, the break of market structure. As simple as that. And then up in here, I want to see it wiggle around and then trade south and break market structure, and then we get short, right? That's keeping it really simple. Just watch the trend. It'll trend up. You'll see higher highs, higher lows. Get involved. And up here it ranges, and we see lower lows, lower highs, and we get involved, right? That's okay. Simple as that. Now, let me just show you something. It's going to go back and just delete some of that. I'm looking for this price action, and I want to show you what that looks like. Okay, here's a perfect example right here. This is trending down. I want to see the range. Anytime I see it ranging like this, I'm expecting the volatility after the range. If I'm bearish, if my bias is bearish, what I want to see is this, and then the spike up, taken out stops. Okay, you get these stops resting up in here. That takes them out, and that gives big money, right? The liquidity they need to pay their orders. So they're going to work their orders all through here and here with this spike, and then it trades in the direction that you want to go. And then we look for, it's just looking for the trend. Like, we're looking for lower lows, lower highs, the break of market structure, and then we get involved. It's that simple. Keep it simple, guys. Keep it simple. It's really the only price action I'm interested in. Like if you're looking to get short, here it is again. It ranges. It spikes up. And then you get this lower, low, lower, high, etc., right? That's the chart pattern. That's the chart pattern. I'm not interested in any other chart pattern, guys. That's it. And you're going to see this occurring time and time again. You name it, it's going to happen. Trend down, range. Then they hit the stops, and then we see it break market structure, and then we're off. Higher highs, higher lows, and that's, you get involved in this rotation here. So anyway, look, long story short, let's just go back to our where we sort of left off. That's it, guys. That's it pretty much, okay? Watch out if it trades up into London. If it trends through Asia, then I'm looking for the short in at New York. If it trends sideways, I'm looking for the dip down in here to get long. potentially somewhere after here, right? And stop loss can be fairly tight. Well, look, there's so much more I could go into, and I don't want to do that because it's going to drag the video out, right? But, you know, you could go for a 2R target long potentially, right? If you see the break of structure and it trades bullish. I'll try to keep this simple. And then up here, break of structure south. And this counter trend is not an easy trade. And I'll tell you why just quickly before we end the video, all right? Let me just, I'll paint a picture for you. And then we short it here. But your target with this thing can, you know what I mean? Like, right, a counter trend target is going to be really limited. But a trend continuation target, I hope this is making sense now. Look at the difference, right? So I'll just explain that. Trend continuation. It's trending. Okay, I think it makes sense, right? This is your opportunity against the trend. Okay, buy, and you get this tight range to kind of do your thing. But with a trend continuation, you sell, and it just goes on and on and on. Okay, so your target can be, yeah, you get the picture. Anyway, guys, look, that's my take on gold at the moment. Hope that has given you some ideas to play around with. That's what I'm going to be looking for. I'd love you to comment. Definitely do that. Your thoughts matter, and opinions. And with that, I hope you have a great day, safe trading, and we'll see you in the next one.